Andy, I had a question for you. An investor, they have multiple properties, but what should they look for when they're purchasing insurance for their investment properties?
Like an investment as far as flipping, or an investment like to buy and hold?
Either one.
Okay, so it's two completely separate insurances, right?
Okay.
But when you're buying a policy to buy and hold, you got to make sure you're buying a landlord protector policy, right? Or a non-owner dwelling policy that covers at least special form coverage, right? When it comes to insurances, there's three types of forms: basic, broad, special.
Okay.
Never want to go with less than special, because special is the one that includes basically all covered losses that carrier companies. Obviously, they still exclude earthquake and flood, right? But that's still one of the benefits. And then more importantly, you got to make sure as an investor, you have the right amount of liability protection, which also extends to personal injury. And why is that important? Because, as a tenant, nowadays in California, right, you sometimes have even more right as a tenant than you do as a homeowner. So you got to make sure you protect yourself in the event of any lawsuit, whether they're trying to sue you for like faulty maintenance, right? Unlawful entry, unlawful eviction. Someone gets injured. You want to make sure that your landlord policy has the right protection for you. And another benefit of the landlord protector policies is a lot of the times investors have mortgages on those properties, so they are so reliant on collecting that income. Whereas if tomorrow, right, a fire happens, make sure that it covers loss of income, so that way you can at least collect the income that you were getting prior to the loss, so that you can still make your mortgage payment, right? So that's for the investors who's going to buy and hold. For the investors who are looking to do a quick flip, funny enough, these investors that I work with are investing so much money, right, into a property that actually fail to properly insure the risk. Right, I've had many. You gotta be aware that all insurance policies have 30-day vacancy exclusions unless it's actually classified as being vacant.
Okay.
And most investors insure their home under standard landlord policies, right? That really, if a loss were to happen while they're doing this flip, there's going to be no coverage from the insurance company, because the property's probably been vacant for more than 30 days, right? And so that's why the insurance company will just, if something were to happen, they back out.
So I'm sorry to interrupt, but just so some people may not know what flip means. So we're talking about, if they buy the property, it's vacant, they're fixing it. So that sometimes that fix up could take 30, 60, 90, 120 days.
Correct.
So if they have that policy that's supposedly covering as an investor, but it doesn't have that, what's the exclusion you said, right?
Correct.
Then whatever happens, it's a lot. Insurance is not going to cover it.
Yeah, and the problem with vacant properties is they're highly vandalized. Sometimes it could be a bitter homeowner that lost their home, and so now they're going to vandalize it once it's done. It's key to make sure you have a vacant product that covers vandalism on all your flips. That's the product to
You know what? That's funny, because that happened to us actually about 10 years ago in our property. Thankfully we did have that exclusion, so we were covered. But somebody went into our property that we're fixing up, and it burned down the property.
Yeah.
Imagine that. So we were lucky enough. We didn't know anything about these things back then, but we were smart enough to have a good insurance person at the time, and he helped us out.
Yeah.
But maybe we got lucky. I don't know. But I'm glad that you're here, because you're explaining to the people out there how important that is. Even if they don't happen to use your company or yourself, it's really important to have that inclusion if they're doing those type of investments.
Correct. There's a greater chance of loss when the property is vacant. That's why the insurance companies have these rules against vacant properties. So understanding that there's a greater chances of loss is why you want to protect your money a little better in that investment and get the right coverage.
Cool.
Great.
Thanks.
No problem. Thank you.